Good morning, traders. Paul here with GammaEdge. Today is Monday, the 14th of November. Let's get started. Pause your players here. Read to the bottom. If you agree, hit that play button. Short-term summary for today. The short-term, intermediate-term models are long. This is day 2. The long-term model is transitioning long. This does take a few days to make that transition. Other models are in various states, and the Russell 2K is still lagging, not participating at all. Contrast this with the S&P 500 model, which is almost fully long. So we have a real separation across the market. Small caps not playing, the larger stocks are. As we've stated numerous times in the past, we are in transition, and this will drive back and forth action. The plus GEX level line remains at 41. Minus GEX is at 3,600. Note there's been a really remarkable day-over-day gain since Thursday, the CPI print of the 4,100 line. You'll see that here as the last slide. It's pretty remarkable. We discussed this morning in the observations to watch channel of the Discord, as well as in our open mic last night. GEX ratios are indicative of being on the higher side of the range. They're up in that 1.1 to 1.3 range, which historically has been a pausing area. We can go higher. We certainly have seen values up into the 2s, but generally in a bear downtrend, which is the longer term trend at this time, we're topping out. And so long entries here may not be the best path forward, but judge your positioning accordingly. We're seeing a lot of levels in play. Look for the upside out of the money call level, the COTMC level, to show the potential to reverse somewhere in that 40.53. So if we do make it up there, not really thinking we will, but if we do make it up to 40.50 in that zone, look for that to be an overhead resistance level, and then look for the out of the money put level where we transition from more out of the money to in the money puts to show the potential to bounce around 39.64. So that's really where we're looking for the intraday plays today. Those move as spot price moves, as moneyness changes. So just be aware that's the starting values for today, and we can go up and down from there depending on what the 0 DTE action is. Excuse me. The 25s, the 39.50, 39.75, 4,000 levels are certainly in play up and down the strike chain. We see levels developing all the way down at 38.75 and then all the way up to 40.50, and there's little pockets in there where some are stronger than others. We are watching two areas today, the 39.50 and 39.65 area. We have these as an end-of-day pinning zone. We're also watching the 39.95, the 40.10 area. That could be another pinning area. So take a look at those, watch those as we move into the day. When we take a look at the market model, like I said, we're on day 2, short term, very, very strong, almost a lockout pattern on Friday. Railroad track up, triggered on Thursday, and hasn't looked back since then. That's when you see the bolded CT, cumulative tick here, and then its shortest term moving average is all parallel and heading up. That is a railroad track up. It's a very, very strong pattern. Thursday would have been the signal, certainly end of day Thursday, early morning Friday would have been your confirmation, and I would have been looking there. When the bolded CT is above the historical ribbon, which is almost flat, by the way, that is a very strong signal. Look, we are very extended though, right? So this is a very, very long distance above this. It would not be a surprise to see some test come down. I would like to see the bolded CT remain above the ribbon, and that will keep this intermediate signal intact on the long side. Also note here that we're starting to see the uptrend on the ribbon. When we see that, this is the long-term signal is starting to transition to that long side, and if we're going to get any form of a long-term rally, we need this to occur. That is a natural occurrence on the output. So definitely bullish, a little extended. Be aware of that. Taking a look across the board, this is just Friday across the various market models that we have. Over here is the tick USC, just starting to transition long. Here's the tick ARCX that we were just looking at, and you can see very, very strong pattern. We're getting that transition. The S&P 500, note the red is well above the cyan line, and we're almost completing the long term on the tick SP. Take a look here at the Qs. We're making that transition also, nice above, etc. Here's the Russell 2000, just not participating. The small caps are just getting hammered, and for a long-term bull, we typically want to see the small caps participate. The fact that we're not seeing the small caps participate is certainly a warning cloud on the horizon. Everyone needs to take note of that. This could be just purely opportunistic plays in the short term, prone to failure. So just be aware of what's going on here. Key levels, no change. Here we're showing more green, which is the deltas here. So we've got call dominated deltas looking out over the horizon. 36 is the downside, 41 is the upside. Not very liquid here at 4,000, but certainly the Livermore level is always in play. Draw your eye over here to the 38.35s. This is the December 30 JPM roll. Already starting to see it in play here. Be aware of that. And also note that the 4,000 strike is plus GEX on the PM settled, which is important because this is very, very short term. So the upside target of 4,000, the downside of 30, what did I say earlier, the COTMP levels around 39.50, 39.60 and change. Could suggest that's going to be our overall range. Also want you to look at the expected move. It is below 3%. That's notable. We have not been below 3% often in the past couple weeks. Taking a look at the weeklies, 4,000, as I said, was the plus GEX. 38.40 is the downside level. You can see that down here in this area, the 38.35, 38.40 zone. This is that JPM hedge level. Look at the tightness between where moneyness flips. They're almost sitting on top of each other, so we can go either way. This actually is showing a propensity to monetize today, right? So I want you to be aware when we see the yellow line above the COTMC level, we believe there is a propensity to monetize as we go up, as more of the out of the money calls transition to in the money. And as they go in the money, these people are fearful that perhaps they will lose their profits, and we could see some monetization. If we do see that, the dealer response will be to sell those calls. So slamming the door shut on these long calls up in this area as price moves up could put downward pressure. We do anticipate that it'll hold though, and we're looking at this 39.60 to 39.75 level there. Taking a look at the 0 DT, transition zone shown here in the blue. You can see this is one potential area that we could certainly see a hiding zone. We're also looking at this 39.95 to 40.10 area only because it's the sandwich of two very, very large areas for today. And so want to just pay attention to this into the close today. Worthwhile. We don't think we're going to go much higher than that 40.50 due to 0 DTE contribution, and certainly to the downside. We've got a lot of positive deltas, so we're not this call domination of things down here is suggestive of support as we roll off. Taking a look here at the 1 DTE, extremely weak, not putting a lot of credibility into this for today, but want you to at least see it. Here's that 38.70 line, not sure if it's in play or not. Really, a lot of the 0 DTE today is going to matter on and drive the conversation. Here's that range again. We have a coincidence between the 0 DT and the 1 DT in that same range. So we're really looking at this as a pinning zone for today, and think that we need to pay attention there. And then again, here's that 4,000 strike into the end of day close. Taking a look at the overall combo complex, which is the AM and the PM settles. Here's the upper level, that 40.53, 39.64 to the downside. You can see the transition zone here. Here's that JPM roll down here. The expected move does put us above that 4,100. Don't think we're going anywhere near that. We think the COTMC, the out of the money call transition point, is going to prevent us. We're going to see some monetization, which will keep a downward pressure on prices. but just something to be looking at here as we go up and watch these ranges. So not a surprise if we stay within the dotted lines here. Taking a look at the Delta-Moneyness, want to just draw your eye that we actually are starting to see a little bit of change in the overall structure here. This is for the SPY, and the in-the-money put structure is coming in, which is indicative of short calls and long puts going in. So this is where the in-the-money puts actually start transitioning to out of the money. So people start losing money at this point, and we could see a push higher as this comes in. We're mindful of these levels. This is pretty far up the chain. We're not thinking we're going anywhere near that, but something to watch that it looks like we're getting a shifting of the structure, and it's worthwhile. Nevertheless, everything's green. It's still pointing upward. We're not seeing any downside pressure. We're not seeing puts go in, which is pulling the numbers down, and so just be aware of that. Finally, taking a look at the SPX structure, 4100, extremely large line, very, very large magnitude, has grown since last week. We're looking here at the 3600 line. It continues to shrink in part because of our move up. These are spot price sensitive, of course. We're sitting here at 39.92 as Friday's close. And so when we're sitting right at that particular zone, we're mindful of that 39.50 line, which is the largest line before we start entering the transition. And then here at 38.50 is where we start picking up momentum to the downside. So the transition range, if we get below that 39.50, things get a little more slippery, and it depends on how people start opening puts down there or what they do in that particular zone. But as long as we remain above that 39.50 line, I think we're in pretty good shape. Will point out this 39.65 appeared mysteriously since last week and is starting to grow. So this is something of note. We're actually starting to see some puts go in, which is shifting the entire complex up. But when we see these puts come in, could be opportunistic to take advantage of any downside pressure that we're seeing. So we are watching this 39.65 line. And remember, we pointed out here, this is a potential area where we're starting to see on the 1 DTE, on the 0 DTE, and the overall structure here for the weekly, we're starting to see the growth of these of some negative gamma there, which could be hiding areas, and that's what's manifesting itself here. So that's it for today. If you have any questions, comments, suggestions for improvement, please join us at GammaEdge.us. Click on this or type it in, go to the pricing tab, fill out the blanks, and come on into the Discord. Happy to answer your questions and help you understand this. Follow us on Twitter, GammaEdges with an S, of course, and then here on YouTube, give me immediate feedback by smashing that like button if you like today's commentary, and that gives me indication that I'm on the right path of providing the information that you need to educate yourself. And then, of course, subscribe so that you get notified when Michael, myself, or Taylor post our videos. We try to do 2 a day and would urge everybody to watch what we're doing. So with that, I bid you farewell. Make it a great week. We have a major expiry on Friday. Could be interesting. So love to hear your comments and hope to see you in the Discord. Thanks, everyone.